Hello, peeps, and welcome to day 2 of the Sly Foundation series. Today, we are going to be talking about market structure, otherwise known as the language of the market. Our objective today is that at the end of this lesson, you should have learned how to identify an uptrend, how to identify a downtrend, and also how to recognize when a market is ranging. You should have been put through on how to understand higher highs, what qualifies as a higher low, lower highs and lower lows, and all those sort of things. Now, let's get into it. We're going to talk about structure. Yesterday, we learned why price moves. Today, we're learning how to read the story that price is telling with which all of those movements it's making. Before taking any trade, the first question isn't should I buy or sell? The question is supposed to be what is the market structure? What story is the market telling? What direction is this market moving in? You understand? Okay, so first of all, what is market structure self? Market structure is simply the pattern that price is creating over a period of time. It tells us who is currently in control, whether buyers or sellers, right? So if, for example, let's do this. If we have this point and then this point, and let's just join it with a line and say that price moved like that, and then it comes down a bit and then does this again, comes down, does this, probably comes down, does this, like that. So what has happened here? We have seen price go from down here to this point, come down here again, and then come to this point, did this, like that. What occurred here is just market creating a pattern. And in this example, what we saw there is an uptrend happening because we had a low point here in the market and then it gave us a high point. We had another low point, but this low point is higher than this low point, so we call this a higher low, HL. Don't mind my writing. And then from this higher low point, price went on to give us a higher high point because this is another high point, but it is higher than this one, the previous one. So this now becomes a higher high, or HH. And then the pattern continued like that: higher low, higher high. This you might want to say this is a lower low, but we'll talk about that later when we start talking about other concepts in our framework. So it creates another low here and then continues to give us another high, which is higher than this high, a low, a high, something here similar to this place, but then continuation to the upside. So that is just a pattern. And like I said, in this particular case, this is price creating an uptrend, a trend that is moving upward. Let's look for something similar on the chart. Let's look for something. Okay, if you see here, let's look at here, from here down here to this point. I'm going to have to just zoom in a bit. Let me zoom in a bit. Okay, so look at what price did here. We have this low point here, and then price moved all the way to this point, then retraced a bit and continued like so. Retracement, continuation, retracement, continuation, like that. This is just an upward movement of price and it is called an uptrend, right? So when price continues in a pattern that shows high, low, higher high, higher low, higher high, higher low, as long as that sequence continues, it shows that buyers are in control. Now, the opposite of this would be called a downtrend. It is still a structural form, a structural pattern of market, a downtrend. You can see an example here where we have a high, a low, a lower high this time, not a higher low, not a higher high, a lower high, because this high point is lower than this previous high. Swing low, swing high, swing low, swing high, like that. As long as this sequence continues, price is in what? It is in a downtrend. So moving on, if price, however, just keeps giving you something that doesn't show a particular direction, it doesn't show like it's moving upward, it doesn't show like it is moving downward, it is just looking like it's moving sideways, something like we have here. I didn't mark that well. This whole movement, you cannot see price giving you a definite upward movement, neither can you see it giving you a definite downward movement. It is just within a particular price range. So this kind of market is called a ranging market, a ranging market or a sideways market. It has different terms you can call it. So this kind of market is characterized by equal highs and equal lows, or relatively equal highs and relatively equal lows. So that explains the three um, structural forms that market can take. We have talked about the uptrend, bullishness. When the market is in an uptrend, it is termed to be bullish. If it is moving downward, it's called bearish market, bearish movement. And then if it just keeps giving you, it's within a range, sideways movement, it gives you equal highs and equal lows, this is a ranging market or a sideways market, right? And usually in this kind of market, is not really advisable to trade, because that's where most beginner traders get trapped, right? So common beginners mistakes include being wanting to buy in a downtrend, looking for buys when the market is in a downtrend, whereas in a downtrend what you should be looking for is opportunities to sell. In an uptrend, you're supposed to be looking for an opportunity to buy. You're supposed to be looking for opportunities to buy. But some beginner traders usually make mistake of selling in an uptrend, and then confusing, sometimes they confuse pullbacks. Okay, now this uptrend has this move that we call impulse move. This one that moves down a bit but does not take out the previous structural point low. This is called a pullback or a retracement. Some people mistake this pullback as a downward movement, and then you see people selling in a pullback, whereas the trend is actually bullish. That would be a mistake, and you would get trapped. If you're if you're trading rather against the trend, you are most likely going to get stopped out. Your account is not going to be happy with you for that. So the idea is all trades that you take should be in the same direction with the overall trend of the market, depending also on what time frame you're trading, of course. But we're going to get to that in due course. So don't trade against the trend. There's a saying, a very popular saying amongst traders: the trend is your friend. But I'll say the trend is your friend until it isn't, because the trend will always, at some point in time, change, right? So don't ignore market structure. You trade what you see, not what you hope to see. So if the trend is bullish, of course, you should be looking for buys. If the trend is bearish, you should be looking for sells. And you should actually not be married to a particular trend. If it changes, then you adjust as well, you adapt. Remember, the goal is not to predict the market, it is to understand what story is being told, and act accordingly. You react to the market rather. You don't predict it. If you try to predict it, you most likely get stopped out and burned. Every analysis I share for you people follows this same process. We talk about structure first, we talk about liquidity, and then yield zone. Now, this is structure that we're talking about, which is um, one of the very first pillars of the framework, the SLY framework. Structure is the S part of it. So, I believe we have I believe we've covered the topics we should in this lesson. Time now for your homework. For your assignment, what you're going to do for me is this. You're going to open your chart, whether your MT5 or your trading view or your whatever platform you want to use to open your chart. Identify for me, identify one higher high, one higher low, one lower high, one lower low, right? I hope that's not too difficult. So do that, take a screenshot, mark them clearly. Like, for instance, let me see. In this case now, I can say this is a low, this is a high, this is a higher low. And then I'll mark it as HL. My pen is messing up. HL. Then this is a higher high relative to this guy. So I'll call it a H. Like that. So on and so forth. So do the assignment and this time post it on the group. Don't send it to me privately. Post it on the group. All right. So I hope this video has been informative. Do well to click the like button if you've gained something from this, and don't forget to subscribe. Yeah, so that you get notified when next I post. My name is Sly, and I'll see you guys in the next video. Happy trading, guys.